Good evening, folks. Welcome back to Stocks to Buy Live here, where we're going to be diving into maybe, not so maybe, stock market crash predictions, because I want to dive into the recent newsletter that came out of Warren Buffett's Berkshire Hathaway and give some clarity, because I feel like a lot of fear mongering is like roped around that guy's portfolio with the cash position they have. And there's like kind of double-edged things being said. I always feel like people say one thing, but then they do another. And I see some of those cross reactions going on in the share letter versus what the portfolio actually looks like on the underlying aspect of things. But I also want to get into some of your comments, questions, so much more in between. And before we do, we got to roll back a little bit before I talk about any of this, show you my portfolio, all that stuff. I want to say, like, I scroll a lot, death scroll through TikTok these days to the point where it's like desperately unhealthy, where I have to watch things on like 2x speed to even like kind of get some enjoyment out of it. My attention span has diminished a lot, but I always get fed like so much like kind of like, I don't want to say like when I'm meandering around, I always keep falling into these pits of people being like, life is hard right now. Like this disconnect between the rich and the poor. It's really hard to get ahead and everybody's broke and millennials are screwed and the next generation doesn't know. And I find myself almost feeling bad for society, but then I realize like, it isn't that bad. Like, yeah, things are not that easy, but if you're not willing to look at the glass half full and like, actually get up out of bed and be motivated to go chase your own bag, find some opportunity out in the world, help you people and build companies, like you'll never get ahead. And I feel like most people's problems is they don't own assets. Like, I feel like half of the world's problem is education based. And we always want to point to the rich people. And no, I think, yeah, to a certain extent, like the rich are just getting balloonly, unbelievably rich. A lot of that does come from mostly ownership in companies that continue to expand dramatically. It's not like they're just taking your money and putting it in their pocket. It does all come from company expansion, right? So like, if you just went out there and younger people started being like, oh, maybe I shouldn't be going into debt to get educated. Maybe I should just be working a couple jobs, live at home a little longer, live with some friends, save some money, look for some opportunity, put it in the investments, look at a 401k, Roth IRA, TFSA, RSP, FHSA. There's so many things you can do. So I really want you guys to stay motivated in these kind of perpetually confusing times, because I'm seeing so much negativity out there that it's really bringing my mood down. But I could do the same thing like a lot of investors do right now. And I can point to the markets and be like, you should be horrified, right? Like there's so much volatility going on, but is there, the volatility index is spiking. It's up 21% this week. Oh my God, you should be losing your minds. But it's still at lows that, it's still at like 5-year lows. It's like, when you look at it on the scale of everything, it's a little higher than where we've been in the past. But for the most part, volatility index has gone nowhere. If you take a look at my stock watch list, however, this is what like is really profound to people. And I don't think the S&P dropping 1.5% in a day is like that crazy at all. Google's down a bit, Meta's down, obviously. Take-Two hasn't moved. TELUS, at least there's one stock here we own that's not doing too bad right now. But a lot of the mega cap companies that have like gone on absolute tangents were the ones that were like the hardest hit, like especially companies like Tesla, Meta, pulled down quite a lot this week. I mean, you look at like even Amazon's down almost 3%, Hood, like a lot of the smaller caps that have been very hype and like more Reddit oriented, like Palantir had some 20% mood swings, no surprise. When you're going like parabolic 1000x, returns in a year, crypto's been kind of stuck in the sidelining when it comes to Bitcoin and stuff. But yeah, I mean, this stuff is all really intriguing and it plays a lot into the Berkshire letters we're going to get into. And even now, like if you get feared out of it, you don't realize like even now and the futures, which I don't believe matter that much, but futures are up. Like, I mean, there's some hopium going on right now in the, the start of the market here into the next week. So people are buying it. They're getting a little bit excited here, which is great. We dive into my portfolio. Like I said, I invest agnostically to what the markets are doing. I'd prefer to see more of a substantial dip or crash or whatever you want to call it. But right now, like I'm more giddy than I have been about the markets in a long time, especially with some of the plays that I'm getting involved with, especially when it comes to Take-Two and stuff like that. In fact, I think Take-Two is going to become the largest single stock position I've ever owned in my entire career. At some point here very soon, it's still kind of mitigated. It's getting up there, but I do want to scale that much more. But otherwise, like, I'm finishing up tax season. I really want to get my RSP contribution room in, and I'm not sure where I'm putting that money just yet. Whether I continue to buy SCHD or look at some more global market opportunities, time will tell. And I don't know how much time it is to go shopping because, it's like you're constantly being thrown these opportunities where you're like, is Palantir going to keep going up? Should I buy that? Alibaba's back to the moon, baby. But there's discounted opportunities and things like Hershey and Nestle. I mean, there's so much going on out there. Like it's really hard to boil everything down, which is why I like having a core strategy of ETFs, because it kind of removes that squirrel without a nut where you're really just kind of running around with your head chopped off, trying to figure out what the best opportunity is. It's like, we're all swimming in roughly the same ocean, right? And usually like when the ocean's, the tide's coming in, it raises all ships. So it's like in these kind of markets, I don't think you can do too much wrong, but that's where you still have to be very cautious. because man, when these markets turn, like Palantir, right? Like somebody had to buy the top. Do we go back to all-time highs? Potentially we go down 50%. I don't really know, but like you kind of got to understand, like when these markets turn, they can be very dramatic. Again, escalator up, elevator down. And if you're on the wrong ride, sometimes it takes these stocks years to turn around. And most people do not have that kind of patience, or they go to zero. I mean, very good food company, a lot of examples, Tattooed Chef. I mean, the list is pretty endless from that 2021 cycle. But provide email for 5 stock success this week or sell out of all your positions. What advice would you give to a 21-year-old from the UK with a $50,000 portfolio, got 10%? Oh, buddy, you're crazy jumping into Take Two like that when it was 183. You beat me to the game there, though. But I mean, you're pretty young. You could probably take the exposed risk if you're comfortable with it and you got a good income. But what are you saying down here? I know a lot of people around $1,000 who want to start investing, but I don't really know what to do. What would you do? Honestly, it really depends on your circumstance, right? I do want to get into the Berkshire stuff, but I will answer this question because it is relatively intriguing to say the least. But really, if you have to look at your time horizon, like how long do you want to invest for? When do you want to retire? How much money are you making at your job? You have 50K already. Is that coming from a job? Are you able to save that? Can you save that? Can you double that in a year from your savings? All of that should dictate how you're going to invest. Somebody like myself was a lot more aggressive when I was younger because I was a full-time magician for 10 years. I had 5 days a week to do nothing. I worked on weekends and I was overanalyzing markets, opportunities, and I was constantly on the ball. So I felt like it was a way to make extra income and trying to leverage bets against the market and make more money. It worked to my favor. We've been in a decade-long bull run, take that as it may. But if you don't have that kind of, precision or time to analyze and feel confident in those and willing to cut losses and like you're comfortable in your trading strategies, your investment strategies, then maybe you want to look at ETFs, cost averaging. If you can make, like if you're making 50, 100K a year and you're able to bank that, man, forget trading. Like you could retire just off index funds in probably 10 years. Because I didn't make that kind of money when I was your age. Like I was still in debt at 21, and even still for most of my working career, I never made more than 50K a year. So you kind of want to be cautious and not get too caught up in this market environment, especially if you have that kind of money, man. Like 50K at 21, I think you could probably retire off that if you don't touch it for the next 45 years. Probably be enough almost realistically. So just keep that in mind on where you want to be, how you want to get there, because I can't tell you how to do that. And Take Two is a fun play, and I'm surprised you got in before I did. But thoughts on Google buying opportunity every day of the week right now, baby? Not financial advice, but if I didn't own as much as I did, I'd be buying more. I mean, our average cost is around 180, and it's kind of getting back down there. What are your thoughts on AI investing, DeepSeek? I hate all AI right now, man. This goes back to the point, like, I don't understand Palantir. There's so much stuff I don't understand, and I just see the opportunities, I get them, but they don't get me excited. So I'd rather just buy the ETFs, right? Let the ETFs wait who's going to win long-term. Because I don't know where NVIDIA is going to be in 5 or 10 years. I don't know where Palantir is going to be in 5 or 10 years. Tesla is anyone's guess right now. Like the numbers don't line up with the business sense. And I don't like pricing a decade into a future because, man, things can mood swing pretty dramatically. So like, I like basically ETFs and then really strategically picking a handful of stocks. And my wife and I only own 3 primary stocks. We own a lot of individual stocks. A lot of them are mitigated. They're small against our ETFs, but our 3 primaries are Meta, Google, and Take Two. Those are like our big bets for this year, and they make up over 15% of our portfolio right now. I think just those 3 companies. And Take Two is, again, a company that I'm going to do something a little bit ridiculous with. That's to be said for now, my own stupidity in a bull market that could be a mistake. Hi, I am new here and very new to investing. I'm thinking about buying into ENB while it's down, but do we think it will continue to fall? You never know how high or how low. You want to get a cost average strategy. I would not, in markets like this, man, don't try and time. Like everyone keeps saying like, oh, you're buying these stocks at highs, but I'm like, I don't know how low or how high they're going to go. The only thing I can do if I believe in the company is to cost average, and depending on what your thesis is, if it's a long-term hold, then who cares what the price is today? It's the same thing with buying real estate. Like there's a lot of arguments around real estate in certain companies, a lot of things right now. And you have to understand, like nobody knows what the fuck tomorrow is going to bring. The only thing I do know is if I believe in it and I want to own it, I'm going to own it. I'll own the highs and I'll own the lows, and we'll see what the next 10 years bring. That's all you can really do, right? So kind of moving beyond this, we'll answer one more question. Can I buy some shares in Canadian companies and switch it to US ticker and save some cash on the exchange rate? Potentially. I mean, I think there's some weird things out there you could do to maneuver cash around to avoid paying. But again, if you're using big banks like Royal Bank, some of these banks don't charge you exchange fees. Like Royal Bank doesn't charge me an exchange rate. It's basically, I imagine they're making something on the spread, but when I run the math on it, it lines up pretty close. It's always under like a % difference. So, I mean, they're not charging a whole lot. But we'll get into a few comments because these are funny. Is it wrong to get sexually aroused when the market dips? And this is like one of my favorite things because you're a good investor when you get excited when things drop. Now, 2020, I made enough money. The wife and I made enough money to buy a condo in Toronto because of how excited we were. And luckily, we had access to a decent, sizable amount of cash. And man, did that cash pay off big time. I mean, that's where the wife was buying Meta. We bought RioCan on these major dips. We were buying a lot of good companies, Apple, like you name it. We bought some quality ass companies, tens of thousands of dollars worth at very great prices. And it's weird because you have to, except for 2022, that's when I kind of flip-flopped because numbers were dropping, new market environment. I remained 100% in the market. I just switched from mostly individuals into ETFs, and we primarily just switched to ETFs because we didn't know what was going on. And when you don't know what's going on, and in revenues dropping and substantially financials stop making sense, I didn't want to leave the market, but I decided ETFs were more appropriate. Now I'm kind of going back a little bit more into some individuals, a little heavier than I have been in the last couple of years. But you got to get excited, man. Like if you can't get excited when stocks go down, the stock market game is not for you. If you are not like, if your war gear isn't on when the sky is falling and you're the guy hitting the sell button and stop lossing and all this, like this is not a game for you. I believe you will become rich in down markets, and they only happen a handful of times in your lifetime. I've experienced, I think, 2 so far. And again, 2020, we made fucking bank. Like, I'm just saying, like, that's where the real, because that's where easy money gets made, because, it's just people are shitting their pants. I love the magic hands at the start of at the start, majestic as fuck. Appreciate it. I used to be a magician. I talk with my hands a lot. I was a stage performer, so I tend to flibber flabber with my hands around. But let's get into the main meat and the potatoes of what I want to talk about here, which is Berkshire Hathaway, a guy that simultaneously is able to instill fear across the market with the moves that he makes, yet at the same time can say something exactly opposite in his shareholder letter. And I do want to point out that it is intriguing, and I think Berkshire is probably one of the most undervalued stocks in the S&P right now. But take into consideration what you're owning when you buy Berkshire, because I don't consider it a growth company. That's probably why it trades at a much more favorable value, because they have about 1.15 trillion in total assets. I mean, which is quite astounding. And a lot of people point to their cash. They're the largest company holding cash today, like the largest cash position of any other S&P company. Second to them is Google. That's why I kept telling you guys, Google has like an absolutely insane cash position. They should be the largest company on the planet. But I mean, they got $334 billion in cash, which means they've got over $700 billion in assets. And keep in mind, only $272 billion of that is in securities, equities, based stock. So we only get to see what he does mostly with the $272 billion. The rest of that, like 800 of that, is just, sorry, not 800, but if we divide that out between the other 7, so about 500 or whatever is sitting purely in private businesses. And we're going to read through some of that because, again, when you look at him being a net seller of stock, especially Apple, and, a guy that touts long-term 10-year plus holding positions, yet flip-flops dramatically on a lot of securities, holding some for barely a quarter, and now is buying into like alcohol brands. And, we talked about this week when it came to his purchase of, where is it in here? I think we just saw, where's it say new? Am I like passing it here? Where is it? Because he bought basically Constellation Brands and Domino's Pizza. And I want to talk about, again, the positioning in that and why it's so intriguing. But I really want to just read to you the points. I read through the whole letter. I always find Berkshire, and I hope they do another annual meeting. I hope we get one more good annual meeting out of Warren Buffett, at least. I mean, these legends, the last one from Charlie Munger was still pretty good before he passed on. Rest in soul, your legendary, your legendariness. But yeah, so basically, let me read through a few highlights that I found interesting. In 2024, Berkshire did better than I expected, though 53% of our 189 operating businesses reported a decline in earnings. So when I see the fact that, over half their portfolio is reporting like a decline, and then they're stacking cash. Again, I always find it a bit intriguing, right? We were aided by a predictable large gain in investment income as Treasury bill yields improved, and we substantially increased our holdings of these highly liquid short-term securities. So this is like a lot of companies right now. The insurance business, which he touts in this letter, is doing very well, and anything that is cash rich looks like it's doing far better than it has in the past, because they're able to lock in a guaranteed 5 or 6% is what they've been getting away with, right? Or they were. We'll see how long interest rates can stay up for, but it's crazy to think that half their portfolio saw a decline in the last year. I mean, keep that in mind. Like, that's crazy that over half your position, you only need like one position like Apple to really crush it. But I'm just saying, like, that is a substantial, interest, because I don't want to see like, over 50% of my portfolio declining. I mean, that would be painful. Despite what some commentators currently view as an extraordinary cash position at Berkshire, the great, and make sure I'm on it, just make sure you're seeing this. Yeah, okay, so as long as I got the screen view up here, the great majority of your money remains in equities. That preference won't change. While ownership in marketable equities moved downward last year from $354 billion to $272 billion, the value of our non-quoted control equities increased somewhat and remained far greater than the value of our marketable portfolio. Berkshire shareholders can rest assured that we will forever deploy a substantial majority of their money in equities, mostly American equities. Although many of these will have international operations of significance, Berkshire will never prefer ownership of cash equivalent assets over the ownership of good businesses, whether controlled or only partially owned. And this is where I get quite perplexed. It's like, if I was sitting on $300 billion, and they had a lot of cash for the last couple of years, and we saw significant dips in incredibly solid foundational companies that I think are going to continue to perpetuate through the future. I mean, I don't know how you couldn't buy Meta or Google or a lot of these AAA rated companies when they dipped as heavily as they did, knowing, the foothold they have in certain industries that I just don't think are getting disrupted anytime soon. So I find that incredibly intriguing, because again, they have 30% of their portfolio is cash. So I find it really intriguing. It's like, oh, we're always going to focus on more equities over anything else, but at the same time, we're selling, into mostly cash from a lot of different positions. I just find it really intriguing, right? Because I would never be 30% cash. I mean, it sounds like an older person's portfolio, and it probably makes sense to be in a safer position if you think the market's overvalued. But I'm a guy that always believes there's good opportunity out there. I mean, you can find it somewhere. Paper money can see its value evaporate as fiscal folly prevails. In some countries, this reckless practice has become habitual. In other countries' short history, the U.S. has come close to the edge, which is also wild that he's talking about the U.S. economy, right? And he says fixed coupon bonds provide no protection against runaway currency. Businesses, as well as individuals with desired talent, however, will usually find a way to cope with monetary instability as long as there's goods or services are desired by the country's citizen. That's a funny word, citizenry. So too, with personal skills, lacking such assets as athletic excellence, a wonderful voice, medical or legal skill, or for that matter, any special talent, I have had to rely on equities throughout my life. In effect, I have depended on the success of American businesses, and I will continue to do so. Very intriguing mouthful. Very, very intriguing mouthful. So there's another few points, again, that I pulled out, so you guys don't have to read through the whole letter. But during the 2019-2023 period, I have used the words mistake or error 16 times in my letters to you. Many other huge companies have never used either word over that span. Amazon, I should acknowledge, made some brutally candid observations in 2021 in their letter. Elsewhere, it has generally been happy talk and pictures. So I find this really intriguing because, like, I think one of the biggest problems we're having with like mega cap companies, or like one of the biggest problems I'm having, because when I overanalyze companies, like, I see their mistakes, and when they don't own up to those mistakes or give a clear path forward, I lose a lot of faith in their management. This is why, like, I have a hard time holding Tesla stock, because like there has been a lot of downfalls and people are completely giving up on their legacy business, presuming it doesn't even matter anymore. And they're going to businesses that have no projected business models, and we're just presuming that they should be worth trillions of dollars based off some future fugazi value. So like, I feel like there's a lot of that in this market environment today, which, I do not like seeing because it's pumping, right? I mean, we see it in crypto. Like, pumping is just the market environment we're in, which probably means it's overvalued. So you got to be careful in these market environments, right? Because everyone's pumping, I'm pumping, everyone's pumping something. The American process has not always been pretty. And, they have loved pointing out the pump here. Our country has forever, and many scoundrels and promoters who seek to take advantage of those who mistakenly trust them with their savings. But even with such malfeasance, which remains in full force today, and also much deployment of capital that eventually floundered because of brutal competition or disruptive innovation, the savings of Americans has delivered a quantity and quality of output beyond the dream of any colonist. from a base of only 4 million people. And despite a brutal internal war early on, pitting one American against another, America changed the world in a blink of a celestial eye. And I love that, like, he really, really emphasizes that, it's in full force today. Like, there is a lot of conniving insanity, yet, America still remains incredibly strong as a place of investment. So, it's nice to see them getting patriotic here on the back of the insane. So, and this is what I love these points, because this is the shit that I pay attention to that nobody talks about, which I find really interesting. Uncle Sam, someday your nieces and nephews at Berkshire hope to send you even larger payments than we did in 2024. Spend it wisely. Take care of the many who, for no fault of their own, get these short straws in life. They deserve better. And never forget that we need to maintain a stable currency. And that result requires both wisdom and diligence on your part. And I love this. A stable currency. Like, currency is the only thing that I've been like so fixated on, like, in the last year, like more than ever have I talked about currency, because like it has been trading, like global currencies have been trading like friggin' mega cap tech companies, or like Palantir at this point. I mean, we're seeing like 20-30% mood swings in currencies like it's nothing right now. And it is a horrifying reality for like inflation, global purchasing power, like export imports. And this comes back to my point. Like, if I was a US citizen right now and I was making USDs, like there's a lot of good global investment opportunities out there right now. It's kind of incredible. So that's kind of like what I pulled out of the newsletter. And it's, again, fairly contrast between, like, they have a lot of cash. I think there was a lot of opportunity. There continues to be a lot of opportunity. I don't think they're investing it as heavily as I'd like to see it. But if you are fearful of this market, Berkshire, they still do a great job with management. You can read through the earnings if you want to get a little bit more clarity into it. But, I still think it's a great stock to own if you want to use it as like kind of a safe haven investment. I kind of almost consider it like SCHD without a dividend. You're primarily just holding foundational companies that, aren't really going to go anywhere anytime soon. But you can't expect huge gains out of them. But luckily, a lot of people pump up Berkshire stock. And some of you pointed out, because I still think this is the most intriguing thing to me right now, is, again, commodities, currencies, how it all plays into these mega companies, because these are things like, you realize that the economy is stacked. Like, it's almost like a game of chess where, like, when you realize at the very top, you have a company, right? Like Hershey's, for example. And then you got to ask yourself, like, okay, they're selling all these products. What are these products? They're chocolate bars, there's food products, a lot of cocoa and other things. Okay, so their primary products come from cocoa, right? So their whole lives complain on the supply chain of this commodity. You could say the same thing about like oil giants, to companies that have to produce cars that need steel or aluminum. And you can start seeing like this whole mechanical, like insane, profound system that's keeping this whole thing functioning globally. Like, and it's incredible, right? And I love looking at these companies because they're directly being affected by this global supply chain. And like Hershey, and this is where these opportunities open up, because Hershey like really popped off. It jumped like almost 20% from the lows here. And again, these aren't companies right now that like, I look at them as opportunities, but again, guys, I only have so much money. There's only so much that gets me excited in this world, and I can only do so many things, and I don't want to be buying 30 or 40 stocks. So let's try and keep my focus, right? But these might be stocks for you. Like, these could be great opportunities for the right person, because again, like Nestle is one of the largest food companies in the world. I mean, think about it. They're down how much right now? I think from peak to trough here, they were down 41%. And this is a company that's worth $222 billion, even after dropping 40%. And again, now they're popping up quite a little bit. Some people seeing some opportunity here, but you guys point out, right? Like the commodity play, like if your cocoa prices continue to drop, Hershey's going to be a great buying opportunity here. If like we go back to if we get to some lows here, because man, cocoa's been one of the best performing commodity, and I'm sure they'll figure it out, but globally, weather, whatever's destroying this. So it's crazy to see this dropping finally and maybe correcting a bit. Maybe that's what's getting people a little bit more excited, but I don't know. But this comes back to the point of Warren Buffett too. And I think the people that work for Berkshire are doing the exact same thing I'm doing, because everyone's like, why are they buying Domino's? Why are they buying Constellation brands? And when you look at the underlying commodities that run Domino's Pizza, because I thought this was the most intriguing play. It's very recession proof. It's a growing company. Like they've done very well. Pizzas doesn't really have a moat, but I mean, they're a dominant brand, and pizza sales continue to sell. It's not like people are quitting pizza anytime soon. And you're asking yourself, why now? Why Domino's? Why now? And you look and the company's doing well. But one of the most intriguing things about it is that wheat prices, they make flour, like the main commodity that runs pizza, is plummeted over the last couple of years. And Domino's hasn't really gone up as much as probably their margin expansion might continue to year over year. Maybe that's what they're playing at, right? Like same with like, you know, you need a lot of these wheat products and whatever grains for, you know, making barley. Even barley prices have plummeted when you look at Constellation brands, right? Barley is the number one thing you use to make beer, and Constellation is a beer company. So it's like, you know, I wonder if they're just looking at the underlying commodities, realizing that these things are stabilizing and margins are likely to expand. And a company like Constellation is trading in the toilet. So who knows? Maybe that's where they're kind of coming up with this. And maybe that's the intriguing thing, because I've just never looked at pizza companies and have been, you know, that intrigued. But I obviously Warren Buffett and Berkshire in general don't chase those kind of chase tech companies. So it kind of really plays into their thesis, I think, overall. But Domino's is cheap and is not that bad, lol. Their pricing is far superior to anyone in my area. So I grew up out north, and honestly, I can't remember the last time I bought a chain pizza. We used to when I was in the city a bit more. And now that I live in the city, the only time we ever get pizza is when I go see my parents up north, because local pizza a hell of a lot better than these fast food chain pizzas or these these massive chains. They don't make good pizza. Local pizza chains, man. Oof. You ever go up north? You live in the GTA, baby. You go up to these little cottage country towns like Beaverton, Sunderland, little chain called Krusty's Pizza. Baby, shouting that sucker out. Some really good chains up there. Have you seen Civil War for baiting? I have not. Is it worth it to make the switch to Wealthsimple given the current deals? Yeah. Even what is it? Questrade has 0 commissions right now too. Questrade's great. Wealthsimple's good if you're doing the right thing. I just stick with my mega banks. They're eating me for commissions and they love it. TELUS rebound. I want to kind of buy a bit more TELUS. I just I don't like I'm not that excited about the Canadian markets right now, and I own quite a bit already. I think we almost have 100 grand and probably VDY between the wife and I, and I've got like TELUS, and you know I'm looking at some other individual stocks, but it's not like, again, I'll cost average there, but I've never been overly excited. It's 20% of our combined portfolios, and I don't want to make the Canadian markets much bigger than that overall. So I'm going to be a bit careful right now. COVID came out of nowhere. So totally, anything else going on here? And then I want to kind of round back real quick here. Thoughts on SMCI this week? It's 10K deadline. Yeah, I know a lot of people have been playing the SMCI game. Again, those are things I don't understand. I've watched people play it. I get why they're playing it. For those that don't know, let's look it up and see how it's doing. SMCI, I guess a lot of people think their accounting practices aren't fraudulent and have to do with the Hindenburg writing a report. So their stock went absolutely, you know, I think it tanked because of it, didn't it? And now everyone's like, oh, they're cheap. They're trading at far too cheap of a value. And then the stock kind of skyrocketed up 100% or whatever. And they're all just waiting to see if the numbers are actually not bullshitted. I don't know. It's pure gambling. So it's not a speculation that I'm overly excited about, to say the least. A lot of you shouting out the pizza stuff there. I got more RCI stock. Nice. Domino's is cheap. You guys are too funny. But when it comes to my portfolio overall, guys, like I'll just kind of give you a rounded conversation here, because like I am becoming a degenerate, I feel like. But sometimes like I wake up to opportunities that my mother's getting involved with this now, and a lot of people I talk to are, which scares me a little bit, because I'm not trying to psych you guys into what I'm buying. It's just I get excited about things that get deep in my soul. And unfortunately, that's Grand Theft Auto 6, which like I never thought it'd be 2025, and a guy that's primarily cost averaging index funds is like, hey, I'm going to YOLO like 50 G's into a video game company that doesn't have profitability. So we'll see how it pans out. Right now I got 25K roughly filled in the position. How much do I got right now? I've been buying it nonstop. Like every dollar I've been able to scrounge around right now, I've been putting in there. I got about $24,639 riding in take 2, but I'm probably going to scale it up to a 30 to 50K position. And I've told you guys relentlessly, like I'm willing to see that drop 50%. I don't mind losing 25K for the opportunity that I think is going to be there. And I don't know how much I got to relentlessly rant about this video game that I just don't think people understand is going to rock your fucking world, baby. It's going to be, I think, something insane. XCI versus VDY, both are great. It just depends what you want. I think VDY has better long-term performance because it's market cap weighted. XCI is better for diversification. Aduro is just 1.2. Yeah, I wouldn't mind bumping up Aduro a bit more here as well. But I'm going to keep it mitigated because it's got a lot more volatility to it. Because here's the thing, right? Like understanding risk, like Aduro is a company that has to execute. They do not have any real revenues. They have test clients right now. And if they can execute and get a client to convert from, one of their pilot programs, like they're going to be off to the races. But there's a lot of risk with that. Like Aduro is a company that could drop. Yeah, they have a tight share structure. So as long as people keep holding tight, like the stock's not going to move much, but there is a lot more risk with Aduro. So you kind of got to mitigate it comfortably. And like I said, you could probably put like 5-10 G's in Aduro. And if that thing does what I think it's going to do, I mean, that thing's going to launch up to like $1 billion. Like you could easily, 5x your money on that one. But with Take-Two Interactive, like I see an upside of at least 100 to 200%. Like I could see it being up to 50 to 100 billion if the market's still crazy like it is now. It could go over 100 billion. And the only reason I can come up with that math is because I'm highly, highly, highly confident that they're going to sell 100 million copies, and they're not guiding for it. And I listened to the earnings call so relentlessly. I've listened to that earnings call 3 times now. That's how like convicted I am. And nobody asked about it. And when they brought up like, what's going to happen with GTA 6? You think all these old people are going to play with their kids? Because it's been like over 10 years, been like 12 years since the game came out. Since we've got even a new release or anything, and they're like, well, we're just trying to make the best possible thing that people will enjoy. Like they're not guiding for it. Their guidance is $5 billion for this year. They're gonna do like 15 or 20. I'm like almost sure of it. Like when that game drops, their $5 billion guidance, they're gonna make like probably 10 billion in the first month of dropping that game. Their total income is going to be like 15 or 20 billion. And the stock is just going to go friggin' nuts as everyone's going to have nothing to do but play that game for 6 months. It's like, I just don't know how people aren't seeing it. And I'm just going through forums and nobody cares right now. So I'm like, hey, it's early. Yeah, the stock's sitting toward all-time highs, but it's early if I'm right. And I could be wrong, but I'm like very, very confident that this game is going to be like headlines everywhere. It's going to be the #1 sold piece of media ever. It's going to be selling for over $100. There's way more. I don't know. I don't need to like rant this to you guys. I've never been so excited about something because I just get it. I get it. I feel it in my soul, and I don't want to miss the opportunity because I don't feel that excited about Palantir. I don't feel that excited about hardly any company with the exception of Facebook and Google. Google gets me really excited. I could YOLO Google like half my portfolio. If I wasn't so like crazy, I could put it into Google and sleep easy at night. But I can't say that about a lot of companies. Take-Two already went up because of GTA. Yes, it has gone up, but it hasn't gone. It's gone up with the market. It hasn't got like, let me just pull it up. I mean, I don't think like that's what everyone, I talked to a guy about this and he's like, yeah, but they've priced it into the stock already. And I'm making the bet that they absolutely have not. I'm like, I don't think it's come anywhere near close to pricing it into the company. Oh, sorry, this is not Take-Two. Is it TTWO or sorry, TTWO stock? So what's the company trading at? It's trading at 37 billion right now. I'd like to get it under 30 billion. I'm hoping the stock dips, but it is only really rallied with the market. It hasn't rallied because of GTA, and they're not guiding for it. It's up 100% from its lows, guys. I'm just telling you, you got a company here that's doing 5 billion guidance, trading for 37 billion. It's not like trading at an excessive value beyond revenue compared to other companies out there right now. But I'm telling you, if this thing does $15 billion by the fourth quarter, that is 3x their current guidance. And I think they're going to do it. Like, what happens to the stock when they make half their market cap in revenue and now they're profitable by like 5 billion or more? That's what's going to happen here. I'm like, I'm willing to gamble on it. Like, that's how confident I am. Like, come on. I mean, just run the math. It's like, and they don't talk about, no one's talking about it. Nobody's talking about it. Man, you got to listen to that earnings call. Like it just doesn't give enough. There's just not enough. They're just hinting. Nobody wants to talk about it. There's no guidance. There's no one talking about it anywhere. Looks like it's just it just double topped. I'm hoping it pulls down, man. I pray that it crashes. I'd gladly put 50 G's in it. If it crashed like next month, I will continue to buy it. Just wait, come back to me, baby. Go to bed. We got to like sleep for 6 months, several months. Got to get to October. We'll see where we're at. We'll talk. And I might look like an idiot, but you get to watch it in full transparency. I'm only one person, but I will be buying a PS5 just for GTA 6. That is how monumental this game is. I am telling you, I have done due diligence beyond due diligence. I have listened to many gaming streamers. I have called them up. I've listened to huge ones. Aiden Ross. Go listen to Aiden Ross. He's going to start a server on GTA 6 and he wants to trade crypto in GTA 6. I've listened to gamers that focus on specific games and they're like, I can't wait for GTA 6. It's the only game I'm going to play when it comes out because I miss it. It's been 13 years. It's going to be the greatest piece of media ever produced. And I hope they don't screw it up. And I don't think they will. I think they're going to do a fabulous job and gamers are exhausted. Call of Duty sucks. I'm not playing the new Zoms. I was a Zoms freak. I love Zoms and now it sucks. There's nothing good. A new trailer coming out February 30th, hopefully. I'm still stuck on PS3, BO2. Yeah, a lot of us are playing older games. There's just nothing good coming out. I actually bought a PS5 anticipating, and I'm funny. Yeah, I mean, yeah, exactly. I mean, we're all old. I'm old. You're old. We're all old. Like we're getting, maybe not that old, but like we get it, right? And back then you had to buy CDs. There was no downloadable things. Like I said, I'm not going to go on this rant any longer, guys. I think there's huge market opportunities out there. You just got to find what works for you specifically. That could be TELUS. That could be Hershey. That could be anything that gets you excited. Just be mitigated in your investments. Understand your thesis, long-term, short-term. Pretty old. don't burn yourselves into the ground doing dumb shit like I'm doing right here. You could just as easily cost average into the S&P and sleep easy at night. But, I'm a guy that wants to outperform the market. And I'm going to try and do the best that I can. And I'm going to display it here on my fast track financial independence to perhaps one day retire early. We're so close. I'm 32 years old. The wife and I are on the cusp, the precipice of having enough capital to keep a roof over our head and food on the table. And we all did it in, a 10, 15 year time frame. So any of you guys can do it, baby. We can all do this. Education matters a lot in this market environment. And you guys are here. We're doing it together, baby. Strongest community on YouTube. If you want to learn more, join my chat groups, talk more in depthly, go to kylelivingston.com. Link is, of course, in the description below. But on that note, stay cool, stay awesome, folks. Let's keep the dream alive, and I'll catch you in the next one. Peace.